We're pleased to welcome now Chad Miller, Professor of Economic Development at the College of Business and Economic Development at the University of Southern Mississippi. Professor, good to have you on, sir.
Glad to be here on this warm day.
Yes, it is a bit warm out there. So, economic development, a bit nuanced from economics, but man, how big a deal that's been in the state of Mississippi over the past year, honestly. We kicked off the legislative session with two special sessions right after we gavelled in. The governor called expressly for the purpose of signing off on an incentive package for two huge economic development projects. One, a battery manufacturing plant, a consortium of three major commercial vehicle manufacturers that joined their forces to create this battery plant in Marshall County. And then on the heels of that, the largest economic development project in terms of the size of the investment in the state's history, that being the Amazon Web Services hyperscale data center project in Madison County in Mississippi. So Mississippi's been blessed with some massive investment. Do you talk about that in your classroom, and to what do you attribute our success here?
We do. We've had record investment this year. You mentioned some big projects, a lot of smaller projects around the state. These 25 jobs makes a big deal in some of these counties.
Absolutely.
That's going away. I think a lot of it is Mississippi positioning itself more, a lot of site development, investing in the real estate. That's becoming a bigger factor for these companies. Speed to market is the key. And then energy costs as well. So we position ourselves well. We've got a team up in Jackson, MDA, the governor's office, really working on things, getting things together, and then the local communities doing their thing. So I think the team's working, and we're firing on all cylinders.
You know, the governor had him on the program last week at the Neshoba County Fair, and he disclosed something that I was aware of privately, but since he made it public, we can certainly talk about it, which is he said he changed his position. He pivoted somewhat on the idea of investing in these industrial sites. You're putting money out there somewhat at risk, kind of waiting for someone to come see it fit to make an investment. And he said he's now learned because of these major projects we've landed just how critical, you said it, speed to market was a major factor in the nod going to Mississippi. And so now he's totally supportive of that, believes we ought to have that statewide. I think we have 32 different sites. Now, they range in size from, a few dozen acres all the way up to hundreds of acres. But this seems to be a big priority for businesses when they're looking to make an investment, locate in a state. How quick can I put shovels in the ground?
Oh, yeah, exactly. 10, 15 years back, it was all, you're thinking workforce, availability, quality. Yeah. I mean, that's still important, but more and more it's having the real estate available.
Yeah.
Ready to go. It does require build it and they will come a bit.
Yeah.
Little risky.
Yeah.
And some of the supervisors are a little uneasy about doing that.
Sure.
But to be successful on these projects, and you look at how they're successful, it's starting years in advance, getting the site ready, getting it cleared, getting all the permits and so forth, getting it ready to go, and it's paying off now.
Yeah, there's no doubt about it. And I think in the case of many of these projects, they've told us, they've told the economic developers that was critical. Also, they just said that the red tape, the regulatory burden is not that onerous here in the state of Mississippi. And they start looking at some of these other states and the hoops they got to jump through before they can ever put a shovel in the ground. It's turning them away.
Oh, it is, across the board. And they always talk about economic development being a team sport. Not just the economic developer, not just the education system, Department of Transportation, environmental quality. You need to have all the players working together to make it run smoothly for the company.
And speaking of economic development, of course, we've got a lot of news on the economy across the country, and of course that affects the state of Mississippi as well. We had a huge sell-off on the markets yesterday. They've recovered somewhat today. I think we're still in for a stretch of volatility. I think the investment community was given a bit of comfort when was it Goldman Sachs, I think, came out and said, okay, 15-25% chance of the R-word recession, which is lower than I think what they were feeling after they got the jobs report on Friday, but it looks like we're in for a stretch of volatility. Your thoughts on that?
I would agree. We were going along great guns there for a while, so you're bound to get adjustments.
Yeah.
So news comes up, kind of sparked with that Japan changing their interest rates, which changed some arbitrage opportunities, created some complication. Then the jobs report came out, wasn't great as thought. But it looks like this morning they've already adjusted and made some adjustments. I think some of the areas we might have overinvested in the AI, which I think is going to be long-term huge impact, probably not in the near term as much as people were betting on. So just some adjustments going on, and we're easing down to more realistic levels, I think.
I mean, earnings are still strong. I mean, there don't appear to be any fundamentals that are too much at risk, although I think it was Google last week gave a bit of a less than rosy outlook, and of course investors freaked out over that. But they're still enjoying pretty good earnings and both top and bottom line growth, and it looks like that's going to continue. But this inflation bug seems to be affecting the consumer, and that could come into play.
Right. Consumer spending's slowing down a bit, forecast to slow down a bit. Wages were going up. They're not going up as fast as they used to. Inflation's still there, so it's still on people's mind. And then people have the agenda for promoting, worrying people in certain areas, and that comes up. So it's hard to sort the numbers for what you hear.
Absolutely true. And then we got the Fed. It just seems like that investing these days is a function of Fed watching more than it is paying attention to what we used to, which is revenue and net income. But we got the Fed. Some were saying after yesterday, man, the Fed needs to call a special emergency meeting and cut the benchmark rate. I don't think that's going to happen. They next meet in September. I think now the futures are pricing in 100% chance of a 50 basis point reduction. You kind of see that happening? I'd
agree. It's also becoming so political these days for the Fed.
Yeah.
They've got to walk a tightrope between the different groups about how they're perceived with making these kind of rate cuts and so forth. But I agree with you. There's probably going to be some in the future, but not a radical cut.
Well, we got spoiled during the COVID era when the economy was virtually shut down. We enjoyed ridiculously low mortgage rates, and of course the price of oil plummeted as well. Who could forget the barges at sea? They would pay you to come pick it up. So that's flipped around somewhat. But, I think even if the Fed came out, Professor, with a 50 basis point cut September, I'm not so sure the market would react positively to that. They may see that as a signal that, well, the Fed's getting worried about a contraction.
I would agree. Yeah, the perception that the big rate cut means recession coming down the line, whereas it could be more just putting it in line with what it should be to have that soft landing you're looking for. But again, people's agendas, politics comes into play, and how do you perceive these?
Well, they're buyers and sellers, right? So, so somebody's benefiting depending on what side of that transaction I guess they're on. But I'm seeing a chart now that's predicting we may see the benchmark rate down to roughly 3.25%, 3.5% within the next 12 months.
Well, that would be pretty good numbers. People make buying houses a lot more attractive than they've been in different areas and so forth. So, it would juice the economy a bit, which maybe you need, maybe you don't. So
it's hard to tell. I mean, they're trying to walk a tightrope and make that call from an amount perspective and a timing perspective, and mistakes have been made in the past on that, as we recall, with monetary policy.
Oh, certainly. Made plenty of mistakes, and it's hard to judge the future by the past.
That's exactly right. Not always a harbinger of the future, as I think a lot of people commonly believe, especially when it comes to markets and monetary policy and the fickle consumer and the fickle producer, honestly.
Right. We're going into new eras and so forth. So.
And we got the individual provisions of the Tax Cuts and Jobs Act, so-called Trump tax cuts, scheduled to expire at the end of 2025. We got about a minute left. An epic battle I'm expecting in the Congress over this tax policy. Extend it, reform it. What do you see?
Oh, I think it is going to be a battle because you're worried about inflation. You give too much of a tax cut to consumers, they're going to spend more. You give a supply side, but that looks bad politically when you're giving it to rich corporations and so forth. So, again, it's all the agenda, and how you interpret things.
And $2 trillion deficits for as far as the eye can see is what the CBO is saying.
Yeah, that, and just getting together with some of my buddy economists this weekend. Social Security, Medicare, it's scary. What
and both candidates have said, we're not touching it.
Which, that's unworkable.
Right. Agree. Totally agree. Professor, thanks for coming on.
My pleasure.
Professor Chad Miller. He's a professor of economic development at the College of Business and Economic Development, the University of Southern Mississippi. We're stepping aside for a break. We're coming right back